By continuing to access this site, its content, or establishing any contact with elliottwave Live, you acknowledge having read and understand all disclaimers and risk disclosures. The following information described within this video or blog post contains information pertaining to hypothetical trades. These trades were not executed and are for educational or illustrative purposes only. Please read the CFTC Rule 4.41 that's on your screen, and keep in mind, by continuing to use this site, establishing any contact with its author, and or clicking on any of the links, you acknowledge having read and understand all the disclaimers and risk disclosures contained within my blog site. Hello, my name is Mike Sinibaldi, and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to be taking a look at the following markets: the emini S&P, copper, and the German DAX. The first market I'm going to take a look at is the emini S&P. At the weekly chart level, the 2007-2011 analogy remains on track. There is a subtle difference between the highlighted corrective structures. In 2007, the corrective move appears to be a simple correction in 3 waves, while in 2011, the correction appears to be more complex. Yet, from a time perspective, both declines remain consistent at 28 weeks when measured from the respective left shoulders. Turning our attention to the daily chart level, price action is choppy and contains numerous overlapping waves from wave 3 red, an indication of a corrective pattern that should be completely retraced, and draws prices down to where wave 5 of intermediate wave 1 equals a 618 multiple of waves 1 through 3 at 1062.75. However, until I see a decisive close below the lower boundary of the corrective price channel and a break of 1138, I must allow for further upside potential, as seen here in this 240-minute chart level that I presented last Wednesday. Several technicals that I mentioned in last week's video continue to support the case for new lows. On the S&P cash, volume has picked up as anticipated, while the relative strength index and the rate of change weakened consistent with declining prices. I'll be watching for continued weakness in the relative strength index and rate of change as prices challenges the lower boundary of the channel and the 1140.13 level. The next market that I'll cover is copper. At the weekly chart level, price action is following my global gains forecast, where we're expecting an initial 5-wave decline to complete cycle wave A, and where waves 1 and 2 are complete and wave 3 is unfolding. And here at the daily chart level, you can see the subdivisions of cycle wave A, where we have waves 1 and 2 complete, and though all not labeled, I believe we have intermediate waves 1 and 2 complete, and copper is in the early stages of a third wave that, when complete, will draw prices down to 305.50, where waves 3 equals a 1.618 multiple of wave 1. The final market that I'll cover in this week's edition of Heard on the Street is the German DAX. This market is interesting to me because it has gone from one of the bright spots in Europe to being crushed. At the monthly chart level, we're working wave 3 circle down after wave 2 completed at 75.41. Most recent price action confirms the presence of a third wave. And dropping to the weekly chart level, we can see the subdivisions of intermediate wave 1 blue, where waves 1 through 4, 1, 2, 3, 4 are complete, and my target for wave 5 down equals a 618 multiple of waves 1 through 3 at 44.64.50. Let's leave it there for this week. I hope you found this video helpful, and best of trading.